All right, you guys, this is the official video for our special campaign, the $500 to the road to 1 million in 2023, utilizing our Dominator EA, right? So with this EA, this is more so getting access to our group. You get an introductory price. We're only accepting up to 20 people for this project. So if you catch this video early, hopefully you can get access, right? We may open it up in a few months down the line, but we want to create a private group and keep it small. That way we can focus on the accounts that we'll be micro managing with the EA. Now, with the EA, basically you're going to start with $500, and I'm going to share with you how this Dominator has been dominating the markets with our specific and customized settings, right? So mainly all we're looking for is 5% daily. Now I'm gonna show you how the Dominator has been doing 10 to 20% daily. But if we utilize the minimum 5% daily, and we do that 20 trading days out of the month, you will see that your account is going to double. So if you see over here on this chart, you're going to see that after the first month, your $500. Now, this is strictly off of compounding, right? We have some people that are going to specifically compound one account, and then you can also open up a second account. That way you can make monthly withdrawals. Now, if you make the monthly withdrawal, there's going to be a small percentage fee of 10%. Being that we're going to be running the EA, we're going to be micromanaging the EA, utilizing our customized settings, specific lot sizes, this, that, and the other. So, say for instance, if we utilize our bare minimum 5%, your first month, at the end of the first month, you're going to start with $500. Your second month, you're going to be at about $1,000. Now, this is based off of the 5% minimum, right? Your third month, you're going to go to $2,000. Your fourth month, you're going to go to $4,000. This is mainly your account doubling every single month, right? Your fifth month, you're going to $8,000. Your sixth month, you're going to $16,000. Your seventh month, you're going to $32,000. Again, this is you compounding the account. Well, us compounding the account for you, and you're not making any withdrawals. This is your one account that you're going to compound for the entire year. You also have access where you can open up a second account. That way you can do your monthly withdrawals, right? So your eighth month, by the eighth month, you're going to be at $64,000 bare minimum. The ninth month, you're going to cross over six figures. You're going to have $128,000. The 10th month, you're going to have $256,000. Your 11th month, you're going to be over $500,000. And by the end of 2023, you should be well over $1 million. That is utilizing the bare minimum of 5% daily. Now, I'm going to show you an account that we're running currently right now, right? This is a $500 account that we started, I believe, Tuesday. So it hasn't even been a full week, being that we had Christmas on Sunday, then we had the holiday, bank holiday on Monday. We didn't even start this account until probably late Monday or early Tuesday. It's not even a full week, and it's already up 50%. So when we say 5% daily, it's bare minimum. This account is already up 50% in a week. Now, if we run these numbers again, and if we do 50% in a week, that means we could quite possibly double the account in 2 weeks, which means you'll get 200% gain in a month. And if we run those numbers consistently, instead of it taking 12 months to reach over $1 million, we can possibly reach $1 million in 6 months. But again, like I said, we're not going to over leverage. We're going to utilize proper risk management. We're going to focus on the bare minimum, which is 5%. So I'm going to pull up the daily report so you can see how it works, right? Let's go to the daily report. Let's pull it up so you guys can see the numbers. Now, you can see we started this account, like I said, on the 28th. That was 2 days ago. Today is the 30th. We started on the 28th with $500. These are all of the trades. We're going to go to the summary so you can see. Balance currently is at 746. Right now, floating is a negative $4. The most I've seen it go into drawdown was less than $100. I have not seen it go more than $100 in drawdown, right? So you got your profit factor. You got your maximum drawdown was Maximum drawdown, 36 bucks. No, I think I saw it go more than that. 6%. It's not bad on a personal account. Anyway, right? It took 184 trades. It won 73 total trades, right? Then you have your profit per trade, your loss per trade. Being that it's not losing as many trades, this really doesn't factor in. Your consecutive wins was 16, consecutive losses was 6. Consecutive profits, $67. Consecutive losses was 38. But notice on the scale, it really had minimal to no drawdown other than here, this small pullback here. But it's been consistent profits all the way up to your $744. This dominator is very, very potent. And the reason we've been testing out the settings, you've probably seen us talk about the dominator for a while. We were utilizing the dominator even on US 30, NASDAQ, the S&P, but we were utilizing it on lower time frames. And when we was doing that, I was seeing 50% gains on a daily basis, right? But when you factor in that the market can actually do one of these numbers on you, or one of these numbers on you, right? When it goes into a full bull run or a bear run, right? And you have it on a lower time frame, you can run the risk of drawdown. And if you're utilizing the actual multiplier, where it's using the martingale feature and it's opening up higher lot sizes as it goes into drawdown, expecting it to pull back, you're running the risk of blowing the account or losing your account if you're using funded accounts. So what we did was we customized the settings a little bit. We stopped using the multiplier feature and just use fixed lot sizes. So every single trade that's trading on gold, as you can see, every single trade on GBP USD is at a 0.03. Let's go back to the detail. I believe this is the one. Nope, that's not it. That is not it. That was another one we was using. Let's see. Detailed report. As you can see, all of the trades on gold is at a 0.02. Is at a fixed lot size. So even if it does open up multiple trades, and then the GBP USD is at a 0.03, and this is a $500 account. When we double the account, we're going to up the lot size just a little bit. We're not even going to double the lot size. We're probably going to go to a 0.03 on gold, and then a 0.04 or 0.05 on GBP USD the next week or the next month, right? So knowing that, now that we have the proper settings, we understand that even if we get caught in a little bit of a drawdown, it's going to be safe, right? I've noticed when we were utilizing the higher lot sizes, when we're utilizing the martingale feature, or if we was on lower time frames, you can run the risk of getting caught in a trap. And then if it's opening up higher lot sizes, your drawdown can increase, which means you can potentially lose half of the account, or if you want a funded account, you can lose the account entirely. So instead of doing that, instead of running the risk, we are now using higher time frames. So that way, even if it does go into a drawdown, it's not opening up 30 trades. It'll probably, at the most I've seen it have open on one pair was maybe, I think it was like 9 trades, right? So say for instance, it was trying to sell here at the bottom. It's trying to sell here at the bottom, but it started pulling back. Then eventually it's going to catch more sales here. When it eventually pulls back, you're going to close out in profit. So as long as we can withstand certain trades like this, let's see if I can find. As long as we can withstand a bull run like this, and then it eventually pulls back, we're fine. Like gold, let's pull up gold for a minute. Gold, if you can get a 300 pip, like a 300 pip move on gold, and it's on the opposite side of the trade, notice here, like say for instance here, notice this trade here, we're on a 15-minute chart. So if we was to measure out this trade, notice it's in consolidation, and the dominator does well during this time period. I'll call them that. But if it's trying to buy, say for instance, it's trying to buy here, but then it goes into a heavy bear run, it goes into a huge downtrend. This is, I'll call them back. This is 300 pips. Usually gold is not going to go more than, this is a beautiful day on gold. This is 300 pips. on gold in one day. If you can withstand this move, even if the dominator was trying to buy the entire time it was selling, if you can withstand the heat because you're utilizing proper risk management, and we're going to run the settings, we're going to customize the settings for you. We already know what settings to use. We already know how to micromanage it. We already know what time frames to use. So once we understand that we can withstand this heat, when it pulls back, you're going to close out a profit. The problem was people was utilizing high lot sizes. They was utilizing the multiplier on the martingale. They were utilizing the lower time frames. And then when you get this huge move like this, it blew the account. It was doing well. Notice all of these trades, in and out, in and out, in and out, in and out, doing very well, very well. And then this happened and it messed the account up or blew all of your profits. You could have made some nice profits all in this area. And then this one trade to the downside takes away all of your profits. So now that we have the settings, we can withstand the heat. The dominator is going to dominate regardless of what's going on in the market. The only thing that we have to focus on, this is where our team comes in with the micromanaging, is news, right? I've even seen it do great in news, right? But we're not going to risk or run the risk of having a dominator on during news. So, like we said, this is our goal. From $500 next month, $1,000 the next month, $2,000. This is, again, 5% daily. If we was doing 5% daily on this account, we would only be up about $75. We're up $250. So we're doing well above 5%, right? 5% is just the minimum. If we can do 5% minimum on this account, you're going to reach at least $1 million by the end of the year. Now, if you open up a second account and you do 10%, right, you're able to, you can withdraw. So if you get to, from the first month of $500, say for instance, it goes to $1,500, right? If it goes to $1,500, you withdraw $500. You withdraw the $500, our fee is 10%. So you pay us $50, you keep the other $450. And now you have $1,000 in your withdrawable account. So you have one account to compound, and you have one account that you're going to withdraw, right? That's if you want to do it that way. Now, if you don't have enough money to fund two accounts, what you can do is, after you get to your profit on the second month, you withdraw the $500 to open up the second account. Then you're going to start over the first account with $500, but now you have two accounts running at $500. You let one compound, and then the second account you're able to withdraw by the end of the month. Virgil, if you're watching this video, that's you calling, but that's the reason why I didn't answer, because I was doing the video at the time. I will hit you back. But yeah, that's about it. I don't want to overdo on this video. I don't want to make it too long, so you know how people's attention span is. So if you have any questions, feel free to get in touch with me. Hopefully you get access to this group. Like I said, we're opening it up. And originally it was only going to be 10 people. That way we could focus on 10 people, but we're getting an overwhelming response. So we're going to open it up to 20 people. So if you're getting access in time, consider yourself lucky. 2023 is going to be an amazing year. I see you guys in the group.